Hey TSW Forex, welcome to chapter 6 of phase 1 of the TSW Forex free course. We're going to jump straight into it. So in chapter 6 we're going to discuss Japanese candlesticks. Alright, so Japanese candlestick. Take into consideration that there are 4 main things that constitute of a bar chart. These 4 things are the opening price, the low, the high, and the closing price. This is the most used type of chart as it contains the most data that can be read by the trader. It is easy to read and easy to comprehend. Thus, most traders who do technical analysis tend to use Japanese candlesticks as it gives the most data. In a sense, it is like an advanced type of bar chart. Candlesticks, Japanese candlesticks, was developed by Munehisa Homa, who was a Japanese rice trader. He discovered that the price of rice on the market was influenced by human emotion, and that word is very important. Remember this word, we're going to use it a lot as it relates to the psychology of the market. When the Japanese stock market was established in the 1870s, this technique was used throughout. This technique was introduced to the West by Steve Nyson. When compared to bar chart or line charts, the Japanese candlestick is a lot more detailed and accurate in reading. So we're going to talk about the types of candlesticks, our Japanese candlesticks, and there are 3 main types of candlesticks. The one, we have a bullish candlestick, a bearish candlestick, indecision candlestick. So we're going to talk about the bullish candlesticks. A bullish candlestick has 1 main characteristics, and that is it opens at a low price and it closes at a high. The term was coined after the fact that bulls attack from a low position, raising its head upward. And of course, that's just a comparison that was used. It's metaphoric that a bull attacks from the low and goes up. So we say that the candlestick is a bullish candlestick. A bearish candlestick. A bearish candlestick has 1 main characteristic, and that is it opens at a high and closes at a low. The term was coined after the fact that a bear attacked from a high position with its paw striking downward. So, that is self-explanatory. The bulls and the bears. Now that you have a basic understanding of how the candlesticks are named, you should know that it is also used to describe a few other things. The trend of the market. So, of course, we say that if a candlestick that is bullish opens at a low and closes at a high, then a bullish market simply means that when the market starts, it's at a low price, and when it ends, it's at a high price. So it's in an uptrend, it's going up. The buyers and sellers in a market. So the persons are the traders that buy in a market, we call them the bulls, and the sellers in a market, we call them the bears. These will further be discussed in the course. So this is the most important part where you need pencils and your rulers. The characteristics of Japanese candlesticks we're going to discuss. On the left we have the bullish candle, and on the right we have the bearish candle. So let's look at the anatomy of the bullish candle. It opens at a low and it closes at a high. But look, there's a wick. So this wick what we have here, so we have the body and we have the wicks. The wicks are at the end. So this thin line that you see through the middle is called the wick, just like a candle. So this is one way of looking at this candlestick. It opens at a low, goes down to this low here, all the way up to the high, and closes at this high. So this is what a bullish candlestick is, and this is a bearish candlestick, and it's normally red. The bullish candlesticks are normally green, and the bearish candlesticks are normally red. So we have the price opening at a low and closes. Open at a high, for the bearish candlestick, and closes at a low. So even though it opens at a low and closes here, we can see that the wicks further extend from the opening price and the close price, and that's just showing where price had been. But the body of the candle tells what the distance between the opening and the close. So the body of the candle is always between the open price and the close price. An indecision candle. So this candlestick has a wide variation. There are a lot of indecision indecision candlesticks in the market. Indecision candlesticks usually close at the same price that it opened or close to it, and it's showing what the name suggests, so an indecision. An indecision candlestick is sometimes called a doji. Some other variations are spinning top, etc. So we have a traditional doji candle here, and then there's another variation that we have, which is a long-legged candlestick, the doji here. Then we have one that looks like an upside down T. We call that a gravestone. And then a T-shaped doji candle, we normally call that a dragonfly. Alright, so you're looking at some candlestick variation. This is a spinning top. And if you look at a spinning top, we can see that the ends of the wicks are quite large and the body is quite small. So this is what a typical spinning top looks like. Alright, there are two types of pin bars. You have the one that has a long wick at the base and the body at the top, and a long wick at the top and a body at the base. Now, if this is seen at the bottom of a trend, it is called a hammer, and if it's seen at the top of a trend, it is called a hanging man. The inverted hammer is this one, the green candlestick that you see in here. If it's at the bottom of a trend, it's called an inverted hammer, and if it's at the top of a trend, it's called a shooting star. So you can see the same candlestick, the name of it is dependent on the location it is on the chart, and we'll discuss that when we're on the charts and the trading view further down in the course. Alright, this is what we're looking for now. This is a very important section of the chapter, and it's candlestick patterns. Now, bullish engulfing candlestick. We have a bearish candle that is here. Of course, we know that the red signifies the bears and the green signifies the bulls. We have a bearish candle, and with this bearish candle, you have a larger bullish candle next to it that engulfs. If you can see this, the body of this, if you look left where the closing price is, and you look left where the opening price is, it engulfs the body of this candle. So this is what we call a bullish engulfing candle, and it's normally an indication that the bulls are taking control of the market. And usually when you see this, the market trends up or goes in a bullish direction. Same for the bearish candlestick. Price where it opens and where it closes, if you look to the left, it engulfs this whole candle. So normally this is showing strong bearish presence, and then normally when you see this at the top of a trend and price goes down after, you see this in the market usually. Alright, another one that we have is pierce line. And what is a pierce line? You have a bearish candle, and the immediate candle has a gap. It opens at a lower price, not the same. Normally you will see the candle start at the same price. It opens at a gap lower, and then it comes all the way up and pass. If you were to pass a line to the middle of this candle, the 50% at the 50 right in the middle of this candle normally closes. The bullish candle normally closes above that 50% line. So I'm going to show you another way of looking at the pierce line. So we have the pierce line. And another way of looking at it is adding these. So for example, you're on the 1 hour time frame, which means this candlestick takes 1 hour to form, and this candlestick takes 1 hour to form. You're gonna have this on the hour will look something like this. So adding these together will give you something like this, and of course it will be green or red. It can be green or red, but if you were to add these candlesticks together, you can see that this bullish, so we have the price opening here, come all the way down to here, and then the price comes back up and closes here. So if I were to draw a line through this like that, and then draw this to here, this will be the wick, and this will be the body of the candle. So right here is the body of the candle, and that's basically forming a pin bar, as you can see right there. Same thing for here, which is the dark cloud cover. We have a bullish candle, and after that bullish candle we see that there's a bearish candle that gaps above, and it comes more than 50% or halfway of this previous candle. So this is another way in a pin bar at the top of the trend. So if this was a 1 hour and this was the 1 hour candle as well on the 1 hour time frame, if you were to look at the 2 hour time frame, it's just adding these two sticks together to form. You have that here. So we are marking out. So we have that here and we have this here, and then we're going to dissect this. So here would be the wick and here will be the body, and this is just another way of looking at what we call a shooting star if it's at the top of a trend. And this is how we look at the pierce line on the dark cloud cover. Now, another candlestick pattern that is very popular is the 3 white soldiers. Normally you will see this at the bottom of a trend, and then price comes down to support level, which we will discuss in later chapters. We have a support level here, price comes down to the support level, and we see 3 successive green candles after each other. This is what we call the white soldier. Likewise, for the one that is, we have a market moving in an uptrend as the green arrow shows, and it comes to a resistance level. After hitting this resistance level, what do we see? We see a rejection with this red candle, and by the time you look, you see 3 successive red candle. That is called a dark cloud cover. Alright, this is one of the most popular candlestick patterns that we have. We're not going to go through all of them, we're just going through the main ones. And we have the morning star candlestick pattern. And the morning star candlestick pattern is the price coming down in a downtrend, right? Hit support. Then when it hits support, is this what? Indecision candle. It's like the indecision candle is just showing like the market is wondering what should I do next? I'm at support. What am I supposed to do? And then you see this massive green candle form. That massive green candle is showing that bulls are ready to move the market up, and this is a 3 candlestick pattern. You normally see 3 together. When you see this is a star, and normally when you see this on support, market normally moves up. The counterpart to it is the evening star, and notice we always have a nickname for them. So we have the evening star, and in the evening star you have a bullish candle come all the way up to resistance level. When it hit resistance, there's a indecision candle like, what am I gonna do at resistance now? Should I break? And the bears say, alright, you know what, I'm gonna take price down. And you see the market give down with a strong bearish candle. These 3 are normally seen together, and the indication that it's gonna move down. Alright guys, this is the end of the Japanese candlestick introduction. This is just a basic introduction to what Japanese candlesticks are. Further, in the rest of the videos after the course is finished, we're going to talk about these and how they are incorporated in the charts. We're going to look at some examples as well, and then we're going to look at different candlestick patterns and chart patterns that affect the market. Thank you for watching, and I hope that you guys enjoyed the video and find it educational. Remember to subscribe, and thank you for your support to all the subscribers.